Buenos días, mi nombre es Juan Manuel Vicente y soy director de análisis del IPRE en España, compañía del grupo Thomson Reuters. Hoy comenzamos una colaboración con Funds People en la que entrevistaremos a algunos de los mejores gestores de fondos internacionales. Estas entrevistas tendrán una duración de aproximadamente una hora, de la que el equipo de Funds People realizará una edición de 6 o 7 minutos. En esta ocasión entrevistaré a Andrew Holliman, gestor de uno de los fondos de renta variable norteamericana que mejor comportamiento ha tenido en los últimos 5 años.
Securities we're investing in, weigh them up versus the valuations rather than investing in themes or from a top-down perspective. We don't solely look at the very cheapest stocks in the universe or the very best businesses in the universe. We do believe that at different parts of the cycle, different types of securities will outperform, and that's where we want to position our portfolio at that different parts of the cycle. So we say dynamic. The idea that the US equity market is very efficient is debatable, and I think it is very efficient in processing information very quickly and factoring that into security prices, but sometimes it can be less efficient about looking at a longer term time horizon. At the end of the day, are the companies themselves into securities, and we analyse the fundamentals. There is no specific underweight or overweight limit on small caps, but the fund does have a tracking error range of 2.5% to 5%
Yes.
versus the S&P 500 all across the market over the last year. But there has been some good opportunities in some of the mega caps which are looking very cheap. So I know particularly in mega cap tech, where we have a fairly big position because many of these companies have entrenched competitive advantages, very strong balance. Third of the American fund tends to be a bit more broad-based, but often we do find many interesting opportunities in North America further down the market cap, such as IBM, which is more of a slower growth company but trades at a 10% free cash flow yield, has a strong balance sheet, well positioned for a returning corporate capex. And that theme you have to invest in the fundamentals of the business versus the. We don't sit around as a team saying, well, shall we allocate money to small and mid caps, or shall we allocate money to large cap? Acknowledge, as I say, that the kind of macroeconomic environment and so these thematic factors will have bearing on the bottom-up factors of the businesses we're investing in. The technology sector, at the beginning of this decade, it was very expensive. Obviously, beginning of last decade, now in 2010, it was very expensive, coming off the internet bubble. We then went through a long period of derating and underperformance. And that derating kept on going. Many companies in the sector had strong balance sheets, very strong cash flows, and very high elements of recurring revenue. So even in an economic downturn, they should still be able to produce lots of cash and have strong balance sheets.
Are there any themes now that you favor currently for the next, for the next few months, and you're implementing your
performance of our portfolios are not driven by one or two decisions that fund managers can get. Started to see some more attractive valuations in some more of the defensive areas, but also some more of the higher quality areas within the more cyclical areas. So within industrials, we've found a number of companies such as Flowserve, which is a manufacturer of pumps for the energy and metals and mining in Illinois, and I think that can give us an advantage versus the US market, and to some extent being based in London and not attending a corporate presentation in New York with 100 hedge fund managers can sometimes could often be a good thing. So that can be an advantage. We've been more adaptable and that's resulted in a higher degree of consistency. Our bond department are always more pessimistic than us, and usually righter than us on the macroeconomic side. And they're secularly very optimistic on such as domestic consumption, which we expect to see a cyclical rebound, but we don't expect US consumer to be the driver of economic growth. The core macro thesis is that once you've had this cyclical increase, then you'll get a period of maybe below trend economic growth as the economy rebounds. We have we measure both our relative sector weights and our contribution to tracking error from sectors, and that's something we have a kind of framework which creates not concrete limits but triggers from our risk department, which would trigger a discussion and a more thorough analysis. Sirona Dental, which is it's actually has exposure to both the US and European dental equipment markets. A more familiar example would be Apple, which we have a big position in. Market underestimates its cash flow generation and its balance sheet and its new product potential. So, for example, with the iPad, most analysts don't put that into their numbers because they're very wary of putting in a new product. We have a lot of confidence about the iPad.
Hope I can see you soon again.
Okay, thank you.